Hi, this video is about how to invest in the stock market. So before we do anything, right, we need to open a trading account. So a couple of the website trading companies, they provide this facility. So 3D Ameritrade, Scottrade, Smith and Barney, Fidelity, Zaco and Trade King, Option Express, and there are many more. And usually the trading costs vary from $5 to $10 per trade. So when you buy, you have to pay $10. When you sell it, you have to pay $10. So that's quite a bit of money if you do a lot of trading. Um, so there is two types of account, margin and non-margin account. So margin accounts, with the margin account you get some extra money to trade, depends on your balance. For example, if you have like you deposit $10,000 in your account, then you will get around same amount of extra 10K to do the trading from this trading company in the margin account. And when as you buy the stocks or ETF, so when you buy the stock or ETF, it requires some maintenance requirement for the type of stock or ETF, and that amount will deduct it from your buying power, and that's how it's work. You need to use your margin account very wisely, because let's say if you're 20K and you buy all the stock of $20,000. Now if you lose the, let's say your stock go 50% down, in that case you lose 10K, but that all 10K will be yours, not the from the trading company. So your account will basically end up with the $0 with 20K investment. Okay, so you have to use very carefully your margin account money. um, Stocks or ETF. So sometimes stocks, they belongs to specific company. For example, Arsenal Mittal or TCK, Cisco Systems, Fremont, Morgan. This FCX is kind of copper and the gold company. So that's the ticker symbol FCX. ETF, they are usually the group of stocks. So this ETF, they keeps lot of companies. For example, SLX. So if you look at the SLX, the major holding of that SLX ETF is like Well, Rio Tinto, Arsenal Mittal, and so on, right? So is like and this is their percentage allocation, and the advantage with ETF is like less risk. Sometimes what happen that one company keep going down and down, is doing underperform, and then it kind of never receive the level that when you buy the stock. ETF is less risky, so because you buy like 10 different companies of stock in the one ETF. So I personally like the ETFs rather than stock. So which stock or ETF to buy? So diversification is the key. For example, if you don't want to buy like Arsenal Mittal X, Akash Steel, MTL all in your portfolio, maybe you pick one or two of the steel company, one or two stock of aluminum, one or two stock of Cisco or like Apple or one of the tech sector. So then you diversify your portfolio, and less risk to your hard-earned money in your portfolio. Okay, so diversification is the key. Um, in here in the steel, the like ArcelorMittal, United States Steel here, but instead of buying all of them, ETF, I you can buy the SLX, and you are buying pretty much few percent of this stock. Sometimes this ETF they give dividend as well, and sometimes their price fluctuation is not that good. Like they don't go percentage higher up that fast. Sometimes the stock do. So it depends what you are looking for. Do you look for the high volatility, or like a stable long term solution for your investment? It depends on your uh, strategy. So now you can do some stock analysis here. So I'd like to go in the on the Yahoo Finance page. You go in the investing, you click on stocks here, and once you click on the stocks, you select this sector and industry analysis. Once you click on that one, it take you to this one, stock analysis. It shows the different sector like basic material, conglomeration, consumer goods, financial. And once you break down that one, this is for example basic material. What are the in the under this one? I believe I select the aluminum here. So if you look at, it's kind of hard to say, so let me zoom a little bit here. Um, in the aluminum is the Alcoa AA is like, it shows here the market cap. For example, for aluminum AA, it has like 9.3 billion market cap, and then P ratio and all this good stuff here, how much yield they give, dividend they provide, and so on. So this is the good way to look at the company before you invest or buy the stock of any company. You also want to look at the chart of the different stock before you buy any stock. For example, let me open one of the chart here. Give me 1 second. So here I am comparing two stocks, aluminum and AA, Alcoa and CNX. They both are the aluminum company, but as you can see here, the volatility of CNX is way higher than the Alcoa AA, right? So if you want to like a lot of buying and selling, this may be the better option because you get the higher percentage. So it depends what is your strategy here, but you can compare here. This one is going like down minus like 30% and is going up like 10%, around uh, 2 or 3% up here. So anyway, this is just to show you that you can compare the different stock here. And if I compare this aluminum A with the Arsenal Metal MT, and then you can see how that Arsenal Metal is performing. So you want to take a look at the chart. That's what I'm trying to tell here. Okay, so let me close this one. Um, Type of the traders, usually there may be two, there could be different, but major one like day traders and swing traders. So day traders, they buy in open market and they sell at the same day. They don't keep it overnight. Why? Because when you wake up sometime in the morning, the stock can be 10% up or 10% down. Now even you put the stop limit, doesn't work because it already passed your stop limit. So day traders, they don't like to keep and sleep overnight with this kind of holding the stock in the portfolio. Swing traders, they buy the stock and keep it for the few days and sell it. Buy because like some people, they do the full-time job and they can't be front of machine all the time to sell and buy at the particular time. So they leave it in portfolio after 3 4, I mean depends, 5 days, 2 months, 6 months, and then they sell or buy stock. So those are kind of called swing traders. Long and short and bull and bears. So uh, sometime when you wonder why it's called bull and bear market. So usually when the bull hit, it hit to tend to hit from down to up by its head. So in the bull market, usually stock keep going up. Bear usually attack from the top to bottom using their hand. So in the bear market, stock usually go down. Um, Long means like when you buy stock and low and keep it holding, and then once you gain like 5%, 10%, 50% sometime, and then you sell it. Depends how much patience you have. Shorts means you sell the stock and then you don't purchase, you just sell the stock, and then you cover it when it goes down. For example, let's say one particular stock company is $20, now it hit like $40. At that time what you can do, you can sell the short, you can sell short the stock, so you sell those stock in the $40. Now if it goes down, then you make the profit. Let's say it hit for $20, then you cover that uh, at the $20, so you make the $20 profit per stock. Now if it go 60 or 80, then you're screwed, then you pretty much lost 100%. So you have to be very smart to do the short selling, and you know what you're doing and which stock you are doing short selling. Otherwise you can screw up yourself very easily. So watch out on that short selling. um, how to pick the stock? There may be thousands of strategies. People use different softwares and all kind of thing. Volume traders, they look for the higher volumes, and when they see a lot of people buying lots of stock, they jump in and do the uh, those kind of higher volume stock. Sometimes you buy low and sell high. Now sometimes you end up doing buy high and sell low, and trust me, like when you jump in, you definitely will face this situation once in a lifetime for sure, that you buy very high and sell very low. Some think that high will keep going high, so when it hit the like 40-day or 20-day or 200-day moving average, they buy at that time, and they think that high they keep going high, and low they will keep making new lows. So nobody wants to hold the falling knife. So that's another strategy. Sometime you think that stock is higher than 20-day moving average, you buy it. Some look at the money flow index. So if money flow index is going coming in is going more than 60-70%, they buy at that time as well. Some look at the Bollinger Band, and in short, you have to come up with your in short, I mean, you have to come up with your own strategy that you are comfortable with. Some of the trading tool I personally like the strategy desk. So here is the example of how the strategy decks look. When you log in, you can enter a lot of symbol. You can enter like few custom made columns like money flow index. So if I can search here, I can see that okay, CF industrial holding money flow index is very high, 80%. So could be sign of overbuying, or it may go up. uh, and like you can see like what is the bid price, what is the ask price, and percentage change. And you can create your own custom made stuff here by putting some condition. In my case, I have created this master list, and this tell me that okay, I think these are the good stock to buy at this time based on M. And those are like how much probability it has to go up, and what is the money flow index, and those kind of things that you can do. And let me scroll a little bit here, and you can see the percentage change. What is the volume? If I click on the volume, I can see that which are the best I mean how much volume going on in particular stock here. So for example, with the Bank of America, I can see let me scroll a little bit here so you can see what I'm talking about. Okay, so you can see how much, what is the volume in Bank of America, and what is the BBY, and so on. So today, Best Buy, the volume difference is around like 200%. A lot of people are buying Best Buy today, so there must be some reason. So anyway, let me close this one. So a lot of trading tools available: Strategy Desk, Trade Architect, Thinkorswim. This is all from Trade Ameritrade, but other website like Scott Trade, and they also provide many good tools. Okay, and some of the references, there may be gazillion of website on this one, but couple that I usually look: Yahoo, MSN Money, Bloomberg, Trading Markets, Seeking Alpha, Investopedia. I may not be the expert, but I just learn when I start to do investing, when buying and selling some stock, making some money. But anyway, hopefully this help you and to start your stock trading. Okay, thanks for watching.